Alright, trader, let's get real for a second. Most traders fail because they focus on all the wrong things. And that's exactly why 90% of them never make it. Sound familiar? Maybe you've spent hours marking up order blocks thinking that's the secret, but let me tell you, just spotting them isn't enough. The real question is, do you know how to use them like the pros? That's why today, I'm breaking it all down and giving you 3 advanced order block strategies that could completely change the way you trade. Here's what you'll learn to improve your trading. Precision entries. Learn how to find high probability trade setups by identifying key order blocks on different time frames. Inducement traps. Take advantage of hidden liquidity near major order blocks to catch strong moves in the market. Breaker blocks. Use old order blocks as new resistance levels to spot great shorting opportunities. But the real question is, how do you actually use these strategies in live trading to get the best results? Most traders overlook the key details, but if you stay with me, you'll see exactly how to make them work. This could be the turning point in your trading. Let's dive in. Starting with the first strategy, we'll use one of the most powerful entry techniques, order blocks. First, analyze the higher time frame to spot key order blocks. Then, drop to the lower time frame, wait for a change of character, and refine your entry for maximum precision. Let's break it down. Alright, let's pull up the 4-hour chart. This is our higher time frame, and the first thing we need to do is analyze market structure. Right now, we're in an uptrend, and this move right here has left behind a strong bullish order block. This zone is critical. It's where institutional traders place their positions. But here's where patience comes in. We don't just enter because we found an order block. Instead, we wait. If price retraces back to this level, that's when we get interested. If it doesn't, we move on. No chasing, no forcing trades. Now let's zoom into the 15-minute chart. Here's what you'll notice. We're currently in a downtrend, and before we even think about entering, we need confirmation that buyers are stepping in. That confirmation comes in the form of a change of character, a break above the current structure. Watch closely. Right here, we get a clean break and close above the previous high. That's our signal. Now, we look at the most recent bullish order block in this move. That's our refined entry point. Now that we found our entry, let's talk execution. We place our buy order just above the order block and our stop loss, a few pips below the lowest point of the zone. This keeps our risk controlled and prevents unnecessary losses if the setup fails. For take profit, we have options. First, we aim for a 1-to-2 risk-reward ratio to secure some profits. Then, we can target the next market structure level or trail our stop loss, locking in gains as price moves higher. But here's where things get interesting. As price continues upward, new order blocks will form. And every time a fresh bullish order block appears within the trend, that's another opportunity to enter. Take a look. Right here, we get a clean new order block, offering another entry. And over here, another one forms, giving us yet another chance to scale in. This is how smart traders compound their positions, maximizing gains while managing risk. This isn't just a trading trick, it's a structured way to follow the market. Next time you're on the charts, focus on market structure, order blocks, and confirmation signals. That's how you align with smart money. And the next strategy, it'll take your precision even further. Stay tuned. Now let's get into the second strategy. Ever entered a trade only to get stopped out right before price reverses? Frustrating, right? But what if I told you it's not random? These stop-outs are actually inducement traps, and once you understand them, you can trade like the institutional traders. An inducement trap happens when a minor key level forms near a major order block. Picture this. Price is trending up, leaving behind a strong demand zone. This is where the big players are waiting to buy. But instead of price immediately tapping that zone, it creates a temporary support level just above it, rejecting multiple times. Looks strong, right? But here's the trap. Retail traders see this level, assume it's a solid support, and start buying aggressively. But what they don't realize is that smart money needs liquidity to enter at better prices. So what happens next? Price sweeps the inducement level, triggering stop losses, and then taps perfectly into the major order block before reversing back up. The retail traders, they're stopped out. The institutions, they're in at a premium price. So how do we trade this like the pros? It's simple. Instead of buying at the inducement level like most retail traders, we wait for price to dip into the real order block. We place our buy limit inside the major order block, ensuring we only enter if price taps into the true demand zone. And here's the best part. If price never reaches the order block, we don't take the trade. No unnecessary risks, no chasing price. Now I know what you're thinking. Does this pattern really happen that often? Trust me, it happens all the time because it's exactly how institutions operate. They don't enter randomly. They create liquidity traps to fuel their positions. Now let's apply this to a real example. Take a look at this chart. Price moves up aggressively, leaving inefficiencies behind. Then we get a break of structure, BOS, confirming a valid order block. But here's where things get interesting. Right before price reaches the order block, it starts forming multiple rejections at a minor support level. That's our inducement. And now, we know exactly what's about to happen. So, what's the plan? Simple. We place a buy limit inside the major order block and wait. No guessing, no chasing price, just patience and precision. And just like that, price sweeps the inducement level, triggering stop losses, taps perfectly into our order block, and reverses in our favor. Retail traders get stopped out, while we step in at the perfect entry, clean, precise, and high probability. For execution, we keep it smart. Stop loss, just below the order block to minimize risk. Target, a solid 2 to 3x risk to reward ratio. Some traders even use the inducement zone as a partial take-profit target, locking in profits while letting the trade run. And look at that, the trade plays out exactly as planned, turning what was a trap for retail traders into a profitable setup for us. Let's move on to our third strategy. Here's the idea. When the price makes a big move up, it often leaves behind an important area, the last strong green candle before the breakout. We call this area an order block. Usually when the price comes back to this level, it acts as support. But sometimes, the price ignores this area and falls below it, breaking previous lows. This change signals something important, a change of character. It tells us that the momentum might be shifting from a rise to a drop. So, what comes next? The price starts to rise again, but this time, instead of the old order block helping as support, it turns into resistance. We call this a breaker block. It's like the market is saying, what used to be a buying zone is now a selling zone. Traders who don't notice this shift might think the market is still going up, and then they get caught when the price reverses. Now let's look at a real chart example. Notice this strong upward move. See how the price reaches a higher high? That's where we mark the last strong green candle before the move, our order block. But here's the twist. Instead of staying above that order block, the price falls sharply, even breaking below previous lows. That's the change of character, showing that the bulls are losing control. Now picture this. The price starts rising again, but instead of moving higher, it drops off that same level, the breaker block. This is your signal. The market isn't going to continue rising. It's turning around. This is the point to enter a short trade. Place your stop loss just above the breaker block. Set your take profit at about twice the distance of your stop loss for a good risk to reward setup. Imagine this trade working out. The price drops as expected, you hit your target, and you secure a nice profit. That's how smart money makes moves. Now, since you've stayed with me this far into the video, I want to share a personal bonus tip, something I usually keep to myself, but you've earned it. There's this situation I see all the time. Price pushes aggressively and taps into an order block. Most traders get confused here, unsure how to enter. They either jump in too early or miss the move entirely. But here's what I do, and it's very simple. When price comes back to the order block, I pause and wait. I don't rush in. I watch closely for confirmation. And the main thing I look for is a change of character. Sometimes it's a bearish engulfing candle. Other times it's a strong wick rejecting the zone, or even a quick sweep of liquidity followed by a shift in direction. The moment I see just one solid confirmation, that's my cue. From there, I place my stop loss just below the order block and aim for the next structure high. That's it. It's all about letting the market show you its intention before you step in. This is what professional traders do all the time. You don't need to overcomplicate it. Just mark your zone, wait for confirmation, and take the trade with confidence. Simple as that. Now I want to hear from you. What's your biggest challenge in trading right now? And more importantly, what topics should I break down next to help you move forward? If this video hits 250 likes, I'll be dropping one of the best smart money concepts courses you've ever seen. Completely free, right here on YouTube. From the absolute basics to advanced strategies, step by step. And finally, if you're finding value in this content, don't forget to subscribe to the channel and comment below if you have any questions. I'm always here to help you grow. But here's the real question. Do you actually know how to spot the best order blocks and filter out the weak ones? Because without that, even the best strategies won't work. Don't make that mistake. Click here to watch the essential video that breaks it all down.